This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Hey, everybody. Welcome back to another great episode of Real Estate Investing 365. I'm here with Konstantin Boubev from New York. He is a real estate investor, and I believe you're a full-time teacher. Is that correct, or professor?
Yes, I used to be a high school math teacher for close to 20 years. And in 2016, I transitioned to educational administrator. At this point, I support high schools with college courses, AP Statistics and AP Calculus. And right now I work for the Deputy Chancellor in New York City. And this is one of the most fulfilling jobs that I ever had in my career, because I get an opportunity to provide services for brand new teachers, AP teachers, who actually working in schools that don't have traditional AP experience. In other words, these newly AP established courses, and usually students who are taking it, they have the first time access to those courses.
Okay.
So this is so exciting. Usually underprivileged students have an opportunity to take AP courses and be ready for college. It's an exciting day for me.
Sweet. Well, that sounds good. Well, I always tell everybody that, they need to level up and they need to start meeting people that are smarter than them. And so that's what I've done here, obviously, by getting in contact with you, because you're way up there on the chain. So that's cool. And I'm sure everybody could tell you have a little bit of an accent. So you're from Bulgaria, is that right?
Yeah, that is correct. I'm from Sofia, Bulgaria, born and raised there. And I came to the United States when I was 19 years old. And this is a little bit of a story with me coming to New York, because when I came to New York, I didn't know anybody in New York and I didn't have no place to stay. So I first arrived in Puerto Rico. I was there like for 3 weeks. And I met some Bulgarians, so I made some friends there. So a group of us, 6 of us, decided to come to New York because we believe there are more opportunities in New York than in Puerto Rico. So after I purchased my ticket, which is about like $350 to come from Puerto Rico to New York, I had about $90 left in my pocket. Thankfully, my friends had more money than me, but we had no idea what to do. I didn't speak any English. And at that point, we decided that we're going to stay in the airport for a couple of days. So we end up sleeping in the airport like for 3 days. And finally, we figured out that we need to get to the city. So we end up getting a hotel room in Madison Avenue. Madison and 35th was it. That was in 1990.
Wow.
So we stayed there for a couple of days, and we actually asked someone, what do we need to do? And the person said, you guys need to go to Brooklyn because you can find an apartment for less money. So the 6 of us, we took the train from Madison Avenue to Greenpoint, Brooklyn, which right now is like one of the most trendiest neighborhoods, Williamsburg and Greenpoint. So back in the day, it was a predominantly Polish neighborhood. And we were able to find a Polish lady who was able to find us an apartment. At the time, it was a 3-bedroom subway apartment, and we rented for $525.
Wow.
Apartment of that size today is probably around $4,000 or $5,000 in that neighborhood.
Oh, man. Too bad we weren't buying up apartments in 1990 down there in that neck of the woods.
There's a funny story. Like a year later, the landlord was selling the property. It was a 6-family house on Greenpoint Avenue in Greenpoint, Manhattan Avenue in Greenpoint. And he asked for $186,000. He was willing to sell the property for us. And we actually, the 6 of us had the capacity to purchase the property, but we were very unsure. We were kind of, afraid. We didn't know what's going to happen. So we didn't buy the property. Today, that property is probably close to $4 million. It's in one of the prime area in Greenpoint. It's on Manhattan Avenue near the park. And it has a commercial unit on the first floor, and there has 6 apartments, 3-bedroom each apartment. So it's about $4 million.
Oh my goodness. Man, but hindsight, you know what I mean? But you guys were just here, right? You just had got here a couple years earlier, and I
Yeah.
mean, you didn't even speak English when you came here. So how would you know that? You probably didn't even know anything about real estate investing, right?
I had no idea. I wish I had somebody to tell me what I needed to do. It was just to buy that property, nothing else, and I'll be set for
Right.
life. But you live, you learn.
Yeah. Well, that's an awesome story. I mean, I just have so much respect because it's like um, a lot of people that are born and raised in here in America or in any country, you know, a lot of people don't ever get ahead or especially get into real estate investing, and they have all the tools available. I mean, they know English, right? They like live here. They're already at a higher level than somebody that comes here with $90 left in their pocket after they get to New York, you know, and hardly anybody makes it even to where, you know, close to where you've made it. So I commend you on that. That's pretty awesome. So after you got here, you ended up going to college, right? Is that what happened? And then you
Yes, I did.
got your
Well, first
teaching
I
and
need to get a green card. So, like, I got married the following year. That's how I get my green card. And then a year later, I attended college. First, I got my associate degree because I wasn't sure about the future, so I didn't want to go straight from a bachelor degree. I got my associated, then I got my bachelor's, then I got my master's, and then I got my second master's. So right now I have two master's degree. I have a bachelor in mathematics. I have a master's in structural technology, and I have master's in administration, educational administration.
wow, that's awesome. Cool. So how did you first find real estate, or how did you get started in real estate investing?
Well, in 1999, we decided to purchase a house, me and my wife, and we were looking, but it was everything was very, very expensive. So we pretty much couldn't afford a property in the neighborhoods that we wanted to purchase a house. It was very expensive, and we kept looking and looking and looking, and we were not able to find anything for years. We were staying with my parents-in-law. They owned the property. They were living in Brooklyn, and they had a three-family house. So we were staying in one of the units. We were paying like a minimum rent. So in 2008, is during the recession, was actually able to find a brand new two-family property built in one of our design neighborhood, which is like Howard Beach, Queens. And we were able to, we put the down payment, we, purchased the property in 2008.
Okay.
And since 2008, that property has doubled the value, a little more
Okay.
than double the value.
So
Since
you
we,
first
we bought it like in the bottom of the bottom 2008, yeah.
Oh, perfect. So you first started looking for property kind of in 99, but it took you guys 9 years to really be able to, you know, save up, and it's expensive in New York. So to
Yeah,
find
and every time you save some more money, the property keep on going and going and going.
right. I know that's a hard predicament there to be in. So, and it was a two-family property, you said, right?
Yes.
So was that on the radar? Was that a plan of yours to be able to afford it easier to get a two-family because you knew you could rent out the other side?
That is correct. We actually, my sister-in-law is living in one of the units, and that's how we were able to, afford, and that's how we were able to take care of all the bills and all the expenses that go with the house. With the
Okay.
property.
Do you remember how you kind of got that idea? Was it like you and your sister-in-law, or how did you kind of think about that?
I mean, that was like the only option I had because single-family houses at the time were selling like close to $500,000. So it was kind of out of the question for me to pay the mortgage and all the bills on my own.
Hmm.
So I needed, additional help in terms of, paying the mortgage, paying the PMIs, paying like the insurance and everything else and all the bills and everything, all the other expenses in terms of, car insurance and, my son was going to school at that time. So I really needed to make that happen in order to make it possible for me. So that was like the only option I had is to buy a duplex where I have, share expenses.
Okay, cool. So how did you end up finding the property? Were you working with a local agent, or was it through a friend, or how'd that work?
So it was very, very difficult to find the property. I believe this is probably the only property that was brand new, like brand new built in this neighborhood. I use the MLS, and I pretty much knew a couple of realtors, and I pretty much knew most of the properties for sale in the specific neighborhood that I was looking at.
Okay. So you
So
kind
as
of,
soon as soon as I was able to find this property and I put them an offer, and because of the market was really like going down in 2008, they accepted my offer.
okay. So that's a important fact right there, is that you knew exactly what neighborhood you wanted to be in. So, I mean, that really gets you to focus on, you know, learning the market, learning the streets, learning all the houses. You knew every single thing that was coming on, and you knew, hey, this thing comes on the market and it's a great deal. So, you were able to act quickly, right? So how did you end up financing the deal?
So it was at the beginning was we got two mortgages on the property. We had the primary mortgage and we took conditional mortgage. So this way we don't have to pay the PMI. And we got like a really high interest rate because at the time was, I believe, 6.75 was the
Okay.
interest rate. And we got a second mortgage to offset the 20% requirement not to pay PMI.
Yeah.
But fortunately for us, I think it was 2 years later, we were able to refinance because of the Obama law. It gives us an opportunity to refinance at 3.25.
Oh, sweet.
So we probably reduced our mortgage payment by half at that time.
Right.
And
That's
we were able to pay off that second loan. So we saved some money, we saved some cash, we pay off the second loan, refinance at 3.25, and our mortgage payment pretty much reduced by 50%. It was
that,
like $5,000 with the two mortgages and 6.75, and right now is about 2,500 with no second mortgage and 3.25 interest rate.
cool. Yeah. I mean, and it's funny, you know, like even me, when I think about 6.75% interest, I'm like, man, that's high. But really, if you look at like history, I think in the United States anyways, like 6.25 or, you know, up to 7% or something like that's been the average over the last 100
You know,
years.
I'll be honest with you, I remember in 1990, was it, 1991, and I remember my brother-in-law told me that he was paying 16% interest rate in one of the properties that he owned in Brooklyn. That was
16?
16%. Yeah, I remember that.
Yeah, that's crazy. And that's funny. I remember my stepdad told me he bought his first house in the 80s or something, early 80s, and his interest rate was like 18 or 19% or something ridiculous. But if that's what it is, and the rate, you know what I mean? I mean, what are we gonna do? But we've just got used to this low interest rate environment for so long now.
And that's one thing I always remember: the interest rates pretty much control the prices. You know, a lot of people thinking about, oh, there's going to be a crash, it's coming. But if the interest rate remain at 4%, the prices are going to remain high. So if they're
Right.
not going up, prices are not going down.
Right.
So unless interest rate is really like 5.25, 6%, then you're going to see a home price reduction. There's always a balance between the interest rates and home pricing, because more house you can afford. Usually people think like, I'm going to buy as much as house I can afford. Like 90% of the buyers have
Right.
that attitude. Like they go to the banker, and the banker tells them this is how much house you can afford. So they go ahead and they do that. So if you can afford more house, you're going to be buying more expensive home. And if you can't afford more house, then you're going to be buying a cheaper home. And that's just going to balance the supply and demand.
Yeah. No, I agree. So, okay. So you end up finding this house, you guys put an offer on it. So was the financing contingent on you having a renter, which was going to be your sister-in-law? Do you remember? Was it
Yes,
like,
that was a must for me. Otherwise, I wouldn't be able to pay $5,000 per month
right.
just for the basic, mortgage, PITI, like,
Yeah.
principal insurance,
So now that you were able to refinance and get a lower interest rate, do you does your other half of the does your renter cover most of your mortgage now?
Yeah, so it's obviously it's like much less now than ever. So
Mhm.
I think it's like come down to $600 or $800 per month out of pocket
Oh,
at this point.
perfect. And nobody can live in New.
I'm not 100% sure in terms of my primary residence. Like my wife is in charge of it, but it's less than $1,000, all the expenses,
You can't
insurance.
live anywhere in New York City for that price.
I'm afraid you can rent a room in one of the poorest neighborhoods right now for $1,000.
Yeah, so you got it made there. So That's cool. So was there any big mistakes that you made when you were purchasing this property that now looking back, um, you wouldn't do in the future?
Well, one of the things that I believe is not a mistake, but a learning was that one of our conditions was to buy a brand new property because we didn't want to deal with any repairs.
Mm-hmm.
So I'm thinking now, with the experience that I have, it's better off to buy a property. Then we could put some, sweat equity. We can build things up, and we can actually generate more equity by fixing the property rather than paying top dollar for a property that's already have like high-end finishes. Like we have the Pella windows, we have the cherry wood floor, so we overpay for brand new property that has everything high-end finishes. So if I'm to do this, to buy a home again, primary residence again, I'll be looking something for fixer upper and have the capacity to put some money in and fix it and build equity rather than just paying top dollar and top price for the property.
Yeah, no, I agree. No, that's good, especially in a higher market, like kind of where we're at now. You definitely don't want to be buying top of the line everything ready to go, because if there's any correction or any kind of like little bump in the road, you don't have any room, right? You don't got any leverage to get yourself out of that predicament.
And another thing, not a mistake, another learning was that we do have the most beautiful house on the block. So all the other properties around me, they're pretty much properties that are 100 years old and they haven't seen, repairs. My property is like a brand new brick building, with top end finishes. So that's another thing that now I'm looking back is it's not a good idea to have the most expensive property on the block.
Right.
And then we purchased brand new property with high-end finishes. So those are the things, this is the learning for me.
Right. Okay, cool. So where are you at now? I know you have a lot more units now and you've kind of expanded out of state. Can you kind of dig into that and give us an overview?
Well, right now I have 11 doors with my primary residence. I have one duplex in Ohio and the rest of them are single family houses.
Where are the single family houses at?
They're in 3 states. New York, like upstate New York. I have property in Berryville, property in Berlin, property in Mineville. Those are 2 hours, 3 hours, and 5 hours drive from New York City. Then I have 2 properties in New Jersey, Newton, New Jersey. I have another property in Windham, New York, which is a ski area. And I have a duplex in Toledo, Ohio, and I have 2 other single families in Toledo, Ohio. So it's 3 different states and different areas in those states.
Okay, so how did you go from buying your first primary residence and you end up buying, a duplex for that? And then you realize that, hey, this real estate investing is a way for me to like gain more wealth and like more passive income. What kind of pushed you to move forward and buy something farther away? And how'd you get started doing that?
So I was always interested in real estate and I was always looking to purchase investment property. But in New York, that was impossible unless you have saved like, $100,000, $200,000. And I didn't have that money saved. So it took me a few years, probably since 2012 until 2016, 2017 is when I purchased my first property. I couldn't figure it out. There's no way for me to find an investment property in New York that makes sense. Here's an example. If you buy a $500,000 single family in New York, you probably be able to rent it for, say, $2,000 per month. So you're always going to have negative cash flow. So I was looking for a deal that has a positive cash flow in New York, and that was not possible to find. And it took me some time to figure out that I really need to get out of New York City in order for me to find a deal. So I think it was 2016, I found auction.com. It's a website for bank-owned properties. And at the time, I was looking at the property. I'm going to talk about my first property. It was in Berryville, New York. So The auction was for $10,000 online. And when I look at the comps on Zillow, the property was valued around $80,000-$90,000. I said, like, well, that makes sense, because if I pay $10,000 cash and I put another $30,000-$40,000 to fix it, I'm going to have some equity. And I was looking at, I used Rentometer to find what was the market rate. So it came out to be 13 to 1,500 per it's for the whole house.
On rentometer, you said?
Rentometer, yeah.
Okay.
So I was thinking, all right, if I put, say, how much it's going to cost me, maybe like $40,000-$50,000 in investment, and I could get $1,200-$1,300 for rent, that's pretty good.
Mm-hmm.
So I went ahead and I purchased the property for, it was $10,000, and maybe everything came like $12,000 or $13,000. I purchased the property, and I have never seen the property before I bought it. I just seen the pictures online. So you know where that's going, right?
Yeah.
So I just did all the numbers. Like, I took the Zillow information, I took the comps from Zillow, I took the rent comps. So I had all the information, and I said to myself, this can't go wrong, because even if, whatever it cost me to fix the property, as soon as I rent it, I'll be able to refinance it, even if I can't sell it, and then things will work out. So, I was able to fix the property, and I was able to, it cost me about $30,000-$40,000, about that range, to get the property fixed. And, I rent it out. I'm getting right now $1,250 for the property.
So
I
what are you,
refinanced the property. I got close to, I think it was $67,000.
into the property?
Yeah.
Okay.
And it cost me, I don't know, like 40, 50, close to 60. So I got like maybe like $10,000 of kind of the equity in cash at closing.
Okay.
And the bank gave me 70% loan to value. So in other words, they require 30% of equity. So right now I have close to 30% of equity in that property. I got $10,000 cash closing, and my positive cash flow is close to 500.
Okay. So go over that. We'll go over that again. So you got the property, you found it on auction.com. It cost you like $13,000 to get into the property, and then another 30 or 40 grand of rehab is what you said.
Yeah.
And then you ended up refinancing the properties, right? And after you refinanced, the property went up in value so much that you were able to actually get all your money back plus another 10,000.
No, actually, the bank evaluation came close to around $90,000. So that was the appraisal of the bank, was $90,000. So my investment was, I don't know, like 55,000.
Mm-hmm.
The bank gave me 70% of the appraisal. So I got like $70,000, and I have like close to 60 invested. So I took that difference in cash after I pay all my creditors.
Yeah.
So
Okay.
that was the aftermath. It wasn't the property value was close to 100,000 after the rehab.
Yeah. So did you end up buying the property for cash, or did you have a loan on the property originally when you got it on auction.com?
No, I purchased the property cash. It was only $13,000.
Oh, the whole property was only 12 or 13 grand.
Yeah.
Oh, okay.
The rehab is $34,000. I put the price of the property was $13,000.
Mm-hmm.
Then the rehab was another $34,000.
Oh,
so
sweet.
I needed to come up with that money cash. So I took a loan from SoFi. This is like the best loans, like on SoFi.com. Pretty good interest, like it was like 8% and so on. So I took the money that I needed for the rehab because I needed to pay that cash. So I was in the property close to $60,000 cash.
Right.
But I own some money to SoFi for the construction work.
Yeah, I hear you.
Once I get the refinance money from the property, I pay SoFi, I pay the loan, then I took $10,000, my profit, and then I listed the property, and now the tenants are paying the rent, the taxes, and everything else, and I have about close to $500 in positive cash flow from that property.
Okay, cool. So did you you use a property manager for that property, or do you manage it from
No,
afar?
I self-managing myself. I use Zillow. That's one of my favorite apps I have in my phone. That's how I find tenants. That's how I screen tenants. That's how I do everything through Zillow. And I met the tenants. I have a good sense of working with people. So with my conversation with them, I found that they were the right people to be at the property, and things have been going fine since they rented the place.
Okay, cool. So then you ended up buying. So after you got this property, you got it all remodeled, refinanced, you got it rented out. Then you went on the hunt for more and more properties, right?
Yes, as soon as I buy this property, like I bought multiple properties, and I was working on multiple properties at the same time. So I was taking money from refinancing some properties, and then I was purchasing new properties at the same time.
Okay. And were all these new properties off of auction.com?
Yes, every single one of the properties I purchased on auction.com.
And how did you kind of like determine the areas that you were going to look at to identify the properties?
Uh, at the beginning was whatever was the best price, which obviously wasn't a good idea. But
Mm,
once I was able to, like, my best deal was in Newton, New Jersey. Once I figured out that that's a great area when the numbers are working, then I focused my attention. So I went and purchased another property there. So at the beginning, it was like taking a chance, going to different places. But at some point, I realized some places I shouldn't be. Like Mindview, New York, I have a property that I purchased for $6,000, and it's still sitting there. I can't find a contractor. I can't find anybody to sell the property. So I wouldn't, ever go there again. So I have that property there for sale right now. So I'm trying to sell the property, but I do have another strategy. I have another contractor who, when he finishes the property he's working in right now, eventually he'll go there. But once I got Newton, New Jersey, got the best numbers for me. So I purchased a house there for 60,000, and I invested only 20,000, and the property value was 180.
oh,
And
cool.
the rent was amazingly high. They close to $2,000. So because of that, I went and bought another property in the same neighborhood.
Okay. So
Yeah.
at first you were kind of just going on auction.com and like you had a broad search area and you would just see, I'm sure it's like on a little map or something, right? Or something to where you could kind of see the different properties and you said, oh, this one's cheap. Let's buy it.
So do you know what's my criteria? My criteria is like, all right, so it can be more than 3 hours drive or like a couple hundred miles. I set up a radius of 200 miles because I wasn't willing to drive more than that.
Yeah.
And then I was looking for something like that costs about 10,000, but has a value of about 100,000. That's my criteria. So distance, say no more than 200 miles,
Yeah.
2-3 hours drive. Then I'm looking for something I could purchase for about 10,000, but it's value at 100,000.
And you would
So
just get
yeah,
the value.
each one of my properties fit that criteria.
Okay. So you just get the value kind of based on a Zillow
Yeah.
estimate.
Which is pretty accurate though. Like Zillow, all the values in Zillow came within 5 to 10%. Very accurate. A lot of
Yeah.
people are very cautious about Zillow estimates, but in my case, it was very, very accurate.
Yeah, and I think it really depends on like the location or where you're looking at the Zillow estimates. Because in rural locations or like a unique property that kind of doesn't have a lot of comps, then that's when they can get kind of like far off. But if you're in an area that has thousands of houses that they can run their data through, and a lot of the houses are kind of similar or something, then they're usually pretty close because everything's relatively similar, it seems. So yeah, that's not a bad idea. So did you work with an agent on any of your properties?
No, I didn't have an agent. I didn't have an attorney. I didn't have a property manager. I did everything on my own.
Okay. So, and then your properties you have in Toledo, Ohio, you have a duplex and two single families out there, right?
Yeah,
And
so
you're
that's a
just
very interesting story. Like I started with a single family, and I hired a property manager because Toledo, Ohio is like 9 hours driving from me. So I couldn't, like, I never been to Toledo, Ohio.
Mhm.
I haven't been there yet. But this is a story. So I purchased the property. I pay about $2,000 for the property.
This is the duplex.
No, this is a single
Oh,
family.
the single family, right,
My first property there was single family. It's 3 bedroom, 2 bath, close to 1,600 square feet.
right. Okay.
So I purchased that for 2,000, and I hired a property manager company. It took them close to a year to do the rehab, and the rehab cost like about 10,000. So they found a renter, and the very next month the person didn't pay the rent. So they took the security, they took the first rent, and there was no money for me. After 1 year, I have this property and still haven't generated a single cent. So I fired that property manager. I hired another property manager, and he had the property for 3 months. He didn't do a single thing. He was on vacation. Blah, blah, blah. So I fired them as well. And I said to myself, guess what? Like, I guess I need to property manage myself. So I went on Zillow and I put the listing and I specified they need a tenant who's going to be able to self-manage, and I gave them a rent discount. So I originally listed the property for $950, and I found a tenant who was willing to self-manage, and I gave them property for $850. So right now it's the tenant is managing the property, and I'm getting $850 per month.
Okay.
Right.
Do you have them like send you photos or anything like regularly, or how do you kind of keep up on it?
Yeah, so whatever they said that needs to be done, they send me a photo before and after, and a receipt from Amazon or Home Depot, whatever they're purchasing the materials.
Okay. I guess that's working out for you. So how did you decide to look in Toledo, Ohio? Randomly or?
So the same way, I was looking for places that I could, generate a value in terms of this property was 2,000, but right now the property is close to 50. Like the market value of the property is close to, like, I think it's 47.
Mm-hmm.
But I own the property free and clear. I haven't gotten a loan on it because you don't have to. I only paid $12,000
Yeah.
for the property to be rehab and everything else. So right now it's rented and it's working out okay. So Toledo, Ohio, like I was looking in Ohio State in general, and that the numbers there look better than Cleveland, for example. So I was just doing my homework. I did a lot of research in Detroit, in Indiana, in Kansas. So I was looking at in Texas, like I was looking at different states to find where the sweet spot is. Like, for example, like I want to put $5,000, but then I get value of 50,000, or I can rent the property for 700-800. So that was my thinking. So that was part of my research. That's how
Okay.
I in Toledo, Ohio.
Okay. So, how much time do you spend looking at auction.com or something? Like, is it every day, all day, or every day, several times a day, you're looking at auction.com and you just kind of like look at the properties and then you write them down and then you look at Zillow and you look at Rentometer and these different things? Or is it pretty easy to where you just like look every once in a while and you happen to come across a deal?
Well, that depends. Sometimes I'm spending on weekends a few hours on Saturday and Sunday, and almost every day I'm there like at least an hour doing research and homework. Right now, I'm not buying any properties at this very moment, so I'm not spending time. But the time that I was buying, I would say at least 20 hours per week. I was
Okay.
doing some kind of a research, whether I was looking at, like, for example, in Toledo, Ohio, I needed to research all the neighborhoods because I wasn't sure where I was buying. So I did I got familiar with all the neighborhoods in Toledo, Ohio, and I have a ranking of like the best neighborhood, the worst neighborhoods. I was reading constantly and researching what are the neighborhoods that I could have an investment.
Okay.
Because if
So,
you haven't been to a place, you need to know where it's wise to invest.
right. No, definitely. And since you weren't working with an agent or anything, you had to learn all this knowledge of the neighborhoods yourself. So, what websites did you use to learn those?
I think just I did a Google search, and there are multiple websites that presented with information of all the neighborhoods and description of the neighborhoods. And Trulia has kind of a neighborhood rating, what neighbors are saying about the place. So if you put the address in Trulia, you can read comments about the neighborhood. So you can get a little better idea. If you put a couple properties, you get an idea what people are saying about that specific neighborhood.
Okay, and I think they have Trulia has a crime map too that kind of gives you an idea of like
Yeah.
crime in the area and what types of crimes they are, right?
Yeah, they do that. Yeah.
Okay, so I mean, yeah, you kind of have an interesting story. You know, I haven't met anybody that I think has just bought all their properties from like auction.com, and then you don't ever see most of your properties. You just kind of get them. And how do you find a contractor? Is there anything special you do to find that? Because that can be a
Yeah,
pain.
that has been the most difficult part, and that's very very difficult to do. And because they're all distance from me, I have no means to manage the contractors. So oftentimes I have paid for certain jobs multiple times. For example, contractor complete the flooring and then the job is not done properly. They take a picture, but the floor is not done correctly. You have to hire somebody else to do it over again. So that has been very, very challenging. And I wish I had an answer, but I don't. What I usually use is Home Advisor to find contractors, and just a general Yelp search, looking at ratings, see if talk to previous customers. But it's been very very challenging to a point that I don't want to do anymore.
Right. Okay.
It's
Have you ever read David Green's Long Distance Real Estate Investing book?
Yes, I have.
It
Yes, I
kind of
have.
gives you some good tips in there or whatever, but I think it'd probably benefit you maybe to like get in contact with local realtors, maybe, I don't know, just to kind of say, listen, I might be selling these in the future, but I need a little bit of help now. Look for the best realtor that has the most, reviews or whatever on Zillow, and then you can kind of pick their brain a little bit, as long as they think that in the future you're going to be selling your house and you'll use them if you help them now or something like that. You know what I mean?
You see, one of the challenge, like if some of the houses are in places where not that many contractors, so usually, say for example, this time of the year, if
Hmm.
you're a good contractor, most likely you're going to be busy.
Right.
If you're not busy or if you're looking for work, there is a reason why you're looking for work. That means you're not that great.
Right.
So, like for example, right now I'm looking for a contractor in Wyndham, New York, and it's been very, very difficult. Like some of the contractors are very, very expensive. So if I hire them, it doesn't make sense to my bottom line. They're going to be great. They're going to finish on time. They're going to be all going to be perfect. But the contractors who kind of fit my budget, they're pretty much kind of shady. From my experience, I know they're not going to finish on time or they're not going to do the work right. So that's the challenge in terms of finding. For places there is a limited number of qualified contractors, difficult. Like in New York, I can hire 10 people tomorrow
Right.
because there's so many. But in certain areas, that's been the challenge.
Yeah, no, I hear you. Contractors are definitely a big issue. And do you have any issues with getting insurance on the properties when you purchase them
No,
on auction?
but this is one lesson that I learned. So one of my properties in New Jersey, I allowed the tenant to have a pit bull just before the insurance agent went in there. So when
Oh,
the insurance agent went in the house, they refused to give me insurance because of the pit bull. I didn't know that. So there's certain requirements they have before they insure the property. So it's always a bad idea to insure the property before you rent it out, especially if you allow, dogs or whatever, anything else in terms of insurance. That might be a challenge.
yeah.
But usually I don't have problem with insurance.
Okay, cool. Yeah, I just kind of had that the other day. Not with the tenant, but with my personal house. The insurance company in my area, I was talking to you offline, a lot of insurance companies are canceling where I live because of the fire danger and stuff. And the insurance company just sent an adjuster out like randomly. Like they told me 2 years ago they were going to send somebody out. Nobody ever showed up that I knew of. And all of a sudden, just day before yesterday, an insurance adjuster comes up and he's taking pictures of my house. And I get home, I'm like, oh, what are you doing? And so he explains it to me. Well, I just ripped off a part of my deck and I rebuilt it, but I hadn't put the railing up. And so luckily this guy was cool. And he said, he said he would take the picture and kind of block it so you couldn't see that the railing wasn't up yet. But he said if it was another insurance adjuster, they would probably, um, you know, deny my house because
Yeah.
there's no railing on the deck. And I was like, well, I literally just put the deck up like last week. And he's like, I know, it's just, so it seems like they should give us a heads up or like a little outline of what they're looking for on their insurance thing. You know what I mean? Because they can just screw you so easily sometimes, it seems.
Yeah, so I remember that company. They just cancel my insurance on the spot as soon as they find there was a pit bull in the house, and the insurance was canceled, and I needed to figure out what to do with the tenant, with the pit bull, and how to insure the house, and with the tenant already in there.
Yeah, tell them to go put their dog in at a staging area for a little while.
Yeah, and thankfully everything worked out. Like,
Yeah.
there was a possibility that I have to ask them to leave and to be able to insure the property. Otherwise, I wouldn't be able to sustain the mortgage. And because the mortgage takes care. The mortgage company, in my case, is Citizen Bank. I use Citizen Bank for all my mortgages. So they have the insurance and the taxes in escrow, so they pay for everything. So they're gonna probably call the mortgage, or I'm not sure what they'll do.
Yeah.
But they know the property is not insured.
Right. Okay. So one question before we move on here is, what do you use for your contracts for your tenants? Do you just find something online, or did you write something up yourself?
Yeah, I was able to find. I use Zillow Form as a rental application, and then I was able to find a contract that I modify for my needs. What I'm looking for, a tenant who has to be able to self-manage and who has to be able to do minor repairs, and I'm only responsible for the main system, like the roof, the heat, the water, and just the big systems. But if the toilet breaks, that's your responsibility.
Okay.
And I'm always giving some kind of a discount in terms of like the rent. And if the market rent is 2,000, I'm listing the property for 2,000. But if I'm able to find the person who is actually willing to self-manage, then I'll discount it to 900.
Okay.
In my experience, is people are willing to do that, and that makes sense for them because it becomes their own home. They don't see me ever because everything takes place digitally in terms of rent collection and everything else. And they know they're responsible for the property. They know they can call me. If they call me, I'm going to say, what do you want me to do? Like, I'm 3 hours away from here.
Yeah.
So I'll make sure that that's explicit in the contract, and they do understand exactly, what's the situation and that what their expectation is.
Yeah. No, that works out. And you don't have it seems like you don't have a lot of money tied up in any of the properties. So, right? Is that correct? So
No,
it's
like
not like a huge.
I have about 30% equity in each property.
Okay. Cool. So where are you headed from now? Is you going to continue to buy more single families? Are you going to move into more multifamily, or take a break for a little bit?
I think at this point, the last property I purchased with a partner. So he also has like 7 units. I think our next step is gonna be multifamily syndication, but I'm really thinking about more like a commercial, like office, or mall, like kind of a shopping center. So that's like my next ideas. But I think I need to do first the multifamily syndication so we can move into commercial. I mean, multifamily is going to be commercial, but commercial in terms of different type of commercial, not just units. It would be more like, office or, shopping center.
Right. Okay, cool. Well, that kind of like brings us to our next little spot here. Is my next question is what your favorite resource is that you like to learn about. So since you're going to be moving into this new space, how are you learning about commercial office space or strip mall type stuff? Is it a podcast or books, or what do you like to do?
So yeah, as you know, I'm listening to Bigger Pockets all the time, and I'm also following this commercial real estate investor, Manny Koshpin. I'm following his Instagram, and I read his books. So I'm pretty much, and also there's another commercial real estate investment by the name Peter Harris. Now they do have very expensive one-on-one mentorship, but I'm not engaged, and I don't think I'm going to be engaged in that type of learning. But I've seen their videos, I follow them on YouTube and Instagram, so whenever I can learn for free, that's what I do. And I have purchased their books as well. So
Okay. And we are both in that David Green mastermind together. Do you find that useful, or would you recommend people getting into masterminds of that type?
Oh, absolutely. Yeah, definitely. You should be part of a mastermind where you can challenge yourself. To me, the most important thing is like being accountable for the things that I need to accomplish. So I wish there was a little bit more of that component, but I'm very appreciative about the mindset shift David is providing, because I know that's the most important thing in real estate. It's not your resources, it's not the websites, it's your mind or your mindset. So that's been the most beneficial part for me, like understanding my mindset and being able to use it in my favor.
Cool. Okay. Absolutely. So do you have a favorite app that you like to use often that helps you in your real estate business?
Yes, I do. It's the Zillow app. That's how I
Zillow.
rent all my properties. That's how I find tenants, and that's how I look at comps. That's how I do pretty much everything.
Okay, cool.
And Venmo, I forgot Venmo. That's how I collect my rents.
Oh, that's good. I was gonna ask you that earlier, and I kind of slipped my mind. Yeah, I have several friends that collect their rents with Venmo if they're self-managing, and it's so awesome. Even with the podcast here, I have like a little uh I guess you could call her an assistant, but she does all my show notes and everything, and it's so easy. She just does it, sends me a Venmo, one click, you pay them, and that's how I pay my property manager and for my properties. It's awesome. So I love that app. So talking about mindset, because we touched on it there, that we're really learning that a lot in the David Green Mastermind. What is like a good mindset tip? What's your best mindset epiphany that you've had recently?
Well, I know that one of the most important books that I read is The Grow Mindset. So from that book, the whole purpose and the whole knowledge of the book is being able to learn from your experiences in terms of the process of learning rather than the final outcome. So to me, a mindset that gives you the benefit of the process of learning, the experience of learning, rather than getting the final outcome. Here, I'll give you an example with the school. For example, a growth mindset in a school would be a student who actually gets energized by the process of learning, somebody who gets an A for effort, not somebody who's just looking to get an A and the exam and that's it. That's the fixed mindset, where students are looking just to get a good grade in a test. But student who is consistently rewarded, or student who is consistently working, and the work ethic is in place, and see the process as the benefit, that's what you need to think about in your mindset. If you find failures or if you find setbacks in your process, then you should learn from those and being energized rather than just looking to make some money. And what happens if you don't make the money? Then you seem to find, like, as the end result, usually it's not what you want.
Yeah, and I kind of find that I'm on board with that as well, because I find that if well, for one, to set yourself like big goals, and that way if the goals are really far away from you, then you can set minor goals along the way to where you're like climbing the ladder. And if you can always continue to reach these new things, like it makes you more energized, like you're saying, to kind of continue on, like you have something you're working towards. But when you just like, for example, when a long time ago when I went through my apprenticeship and my lineman working on power lines, I enjoyed my apprenticeship because I had these steps along the way. I was making a new step in the apprenticeship and I was making more money, and then I was moving on to the next thing and I was working further and further towards this goal. But I did kind of find what happened is once I got to be a lineman, a journeyman, all of a sudden I'm topped out and I'm making a lot of money. And I'm thinking, well, now what's my next thing? And that's kind of when I got into real estate, and I thought, okay, well, this is a way for me to continue on. So you buy one and then you try to learn to enjoy the process, is what you're saying, right?
Yeah, this is always the basketball analogy. For example, you could have nice victory over the other team, but if you're not executing your game correctly, that eventually is going to hurt in the long run. But if you play a great game, and even if you lose, you're still growing. So that's the growth mindset. It's like, work on your game and don't focus on the score. You might not be making the money that you want right now, but if you focus on your work and you find benefits from your work, if you execute on your game 100%, even if you fail at the end, eventually you're going to get to what you want to go.
Yeah. So what was that book called again?
It's the book's called Grow Mindset.
Grow, GROW Mindset.
Yeah, Grow Mindset. Yeah.
Okay. Cool. Well, what would be your best advice that you have for somebody that's like just wanting to get in, to real estate, and maybe they want to go the auction route. Is there something that you could like point them in the right direction to, like, listen, don't do these things, but do this?
Well, I think the very first thing is to being able to take a chance. You're gonna have to risk this. Not to be afraid of anything. Just think about what is something that you can risk. For me, it was like $10,000. I said, like, I'm gonna purchase the house for $10,000. No matter what happens, I still gonna, I'm gonna be okay, even if I lose every single penny. It was a risk that I was willing to take, and I understood the risk, and anything can happen afterwards. So I wasn't afraid. I was sleeping well at night, and I wasn't waking up in the middle of the night and thinking, oh my God, what's going to happen if I lose my money? If I lose my money, I lose my money. That's just part of the game. But think about your learning. So every time there is an obstacle, there is something that goes in your way, there's some kind of a learning. So that's going to be your job. So if things work out great for you after you purchase the first property, then wonderful. And if they don't, you're going to learn something out of it, so you can be more prepared for the next obstacle. So you just like think about the process. What are you doing? Are you working in terms of learning, or are you working in terms of making money? If you're working in terms of making money, eventually you're going to hit a place where making money is going to stop. So you got to think about the learning as your process, because you can continue learning no matter whether you're making money or losing money. You're still going to be learning.
Right.
Go ahead, get the first deal. Just make sure you can afford to lose the money, and then think about the learning. What did you learn from that deal? At the end of the day, when the deal is all done, what was the learning? What was the growth mindset that allows you to go on and go on? Because you got to protect your experience. This is something that I learned. Oftentimes people get discouraged from failure, and they got to protect that learning experience. It's not so much the failure. Don't look at the outcome from that first property. Look at the learning experience. Look at the process and the pattern. The trajectory is going to take you to the next property and eventually to your final goal.
Yep, definitely. And get that, just make a deal. Do a deal, your first deal, right? Because if you don't ever do the first deal, you're never going to do 100 deals.
Yeah.
Cool. Okay, what about influencers, or somebody that you really look up to that gives you good insight on whether it's social media or online or something like that?
I mean, for many, many years, I have followed Anthony Robbins. I even went to one of his seminars, Unleash the Power Within, and I Walk on Fire. That was 2005. I think it's always very beneficial to kind of understand his mindset, again, like the way he's asking questions. And this has been very important for me. Like, what is like the self-talk? What are the questions I'm asking myself? For example, am I asking myself like, oh, why is this happening to me? Or what if I can make this happen? So it's just difference of asking questions, and again, thinking about your own mindset. Are you in a position to grow in the process, or in a position just to look for what happened in terms of, oh, it was a negative outcome, therefore it's over, therefore I need to return, therefore I need to give up, therefore it's the end of my journey. So it's all about in terms of perspective and how you think about the process.
All right, cool. Well, Konstantin, thank you for being here. Where can people find out more about you, or if they have any questions or something, can they reach out to you?
You can find me on Facebook. I'm on Facebook, Konstantin Boubev. That probably I'm the only person with such a name, so it wouldn't be hard to find me.
Yeah. Well, cool. Well, thanks for being here. I really appreciate it. I'm sure people can learn from your story and be inspired from you coming here and making a great life from having really nothing, right? I mean, you did amazing.
$90.
Yeah, $90. All right, man. Well, thank you very much. You have a good afternoon, and I'll talk to you soon.
Thank you. It was a pleasure to be here.
Thanks. Bye-bye.